Good afternoon. Good afternoon, everyone. And once again, we're giving folks during the summertime. I'm not sure it's going to be every day, but we'll do it periodically around noon, anyways, and give you a chance to ask any questions and to see what we're looking at, and and just that, a chance to ask questions. Market has been pretty choppy overnight. Excuse me. And we've continued to run the same strategy that we ran the last 2 days, and it did struggle. It had a bit of a draw, and it did take what in essence was this last trade right here. It took out $1,000 profit, reducing that draw. Very well could have made more, but we're not in disengaging the robot. We're trying to keep the robot engaged. Might be a good word for it, as best we can, meaning we can disengage the robot and execute our own trades if we choose to, but I'd rather not. And we're not blowing through any stop signs here. We're not to use some Tesla terminology, engaging and disengaging their automation. And so we want to try to keep this robot trading on its own. And that's been very, very tempting, though, to pick off some nice trades. But when we look at Swing Machine itself, I'll come in and just highlight this, and then I'll shut up and let you guys watch and answer any questions. But we come and we look at the 1 minute interval. In the 1 minute interval went long at 11:35. Just minutes ago, 28 minutes ago, basically flat. The 3 minute went long 49 3-minute segments ago. And if one had, if you didn't stay up all night trading or weren't up earlier and you took that trade, yes, with a mini contract, you're up 1,700. With a micro, you're up 170, 180. 10 minis, yeah, you're up 18 grand. And then here's the 5 minute, and we were in this trade, and it is up about 1,900, and we're no longer in it because the robot took $1,000 profit. Which now the robot overnight, since it's right here, we'll just kind of circle this. This has been running since 11 o'clock last night, and the overnight session was pretty choppy, and that's what put us down a little bit. So we're going to try to let it stay engaged, and we'll answer any questions you have. We'll be here until probably just a few minutes before 1 o'clock. If it shuts down abruptly, I apologize in advance. YouTube's on a timer, and we do need the resources, but it's a chance for you to ask any questions. And I'll remove those squares here so that they're not distracting. You're on a bit of a delay. We're not suggesting that anybody take these trades on YouTube. If you are watching on YouTube, though, you might want to put it in high definition. You'll get a much better image. This is the sort of view as an example that we will set up for new members that come into our Q school, and we will invite them. We'll ask them to trade in a simulated fashion. They can have TradeStation. They may have another platform. They may have Ninja or some other platform, and we'll ask them to trade around the strategy and around Swing Machine, and in essence, not competing with me or competing with anyone else, or even the market for that matter. You're just competing with this little robot. And again, when you have the robots, you can have them fully engaged. They're putting you in, they're taking you out, they're doing what they see fit, or you can choose to disengage, and you might disengage and hit the stop or an exit to take a profit or a loss. That you do have that capacity. In the beginning, we really try to lean on everybody not to do that, to try to give the robot an opportunity to do its thing, and person just needs that experience the hours, flying the plane, driving the car, in automation, and hopefully realizing that it isn't going to kill you. Hopefully. No, we have some daily limit levels that we wouldn't let that happen. So, but we don't know the outcome, and hopefully we'll, I don't even know if we're going to get another trade in here. But if you have any questions, feel free to throw them into the chat. Be sure to visit our website. Still have questions, you want to email them to us, we're happy to answer. And then we're always available to take a phone call. Enjoy. Okay, so the momentum is still up. 43 minutes, $1,000. 54 3-minute segments, 2,700. 33 5 minutes, basically the same. Basically, this about the same trade, $2,700. The trend is certainly up. You can see that here, and you can see it here as well. This is on a different time frame, though. But what we do see on the 5-minute, look what it's doing. It's up at 90, pushing into euphoria. This is not where a person would want to initiate a trade, at least not to the long side. Not to the long side. If we push up much higher, it is likely to come back in. We're not going to manually do that, though. I'm not going to engage. There's a time and a place for that. I do think as a trader, and certainly during your Q school, we do want you engaged. We need to see, you need to see what you're capable of and what trading skill you have. But when we're engaged, when I am actually physically putting on trades, I don't want to trade ideally more than 4 or 5 times in a day at most. So much of the time is spent just waiting for the trade setup and knowing what to wait for and what to do and whatnot. So during the Q school, we, depending upon what the view is, and what we're trying to accomplish, we will coach a person, in that regard. We're not doing that today. We have a trading robot that is engaged, and it's going to do what it's going to do. And it's been fairly quiet. Well, it was a little choppy overnight. So she has experienced a draw of some $1,400. We're still profitable for the week. So that we got plenty of time today to clean this up. And I don't know, if that's going to be possible by 1 o'clock when this YouTube session will come to an end. But if you have any questions, don't hesitate. And you're also, of course, welcome to visit the website, send us any questions you have. The idea is, of course, that if you're, it's important to have good discretionary skills, good mechanical skills. But 3, 4, 5 trades a day is about max, I would think, for any one person to be doing. But if you can graduate into the realm of robotic trading, really doesn't matter how frequently the machine, as long as the machine is getting it done. Now, this particular strategy isn't super active, and that's also, I was discussing with a young person that I called the other day, and a lot of times new traders, they have a tendency to overtrade. They want to trade super fast a lot. And they also have an expectation that they can take out all risk, and that's not possible. It just isn't. You cannot eliminate risk unless, of course, you're one of the Chicago hedge funds and you're buying the order flow from the sheeple and and truly moving the market one way and then the other. I mean, yeah, they have little to no risk. But we don't have that. Nobody else has it. And we're basically just tracking a money flow. But as I mentioned here, we were just up into about the 90 area, pushing into euphoria. So it's a very normal place for this thing to pull back. I wouldn't be the least bit surprised, and if I was trading this, I'll just kind of comment on this. I'm not, but if I was trading it, I wouldn't want to be above. We got this little swing area here, this level here, which is 15,207, and this is the sort of thing that one would do is simply you would want to not go above that area right up in here. Where might we go? Well, we're probably gonna go Again, this is, we're probably going to get down into this area right here. And if we break this, we will challenge this. If we were doing it manually, and there's some other things, but the cue, how we knew that, that this was likely to get rejected was we were up in here, right? We were pushing up into euphoria. If you have any questions, don't hesitate. I'll I guess I can leave those little marks there. We'll see how it plays out. But again, if I'm doing that in a given trading day, trading session, I don't want to be in front of the screen all day, every day. I don't. Sometimes I am, but we're not always trading. But if I am putting on these types of trades visually, manually, doing it, again, I don't want to be doing it, ideally no more than 5 times. We're not putting on 10, 20. There just aren't that many trades in a given day. They just aren't. Be trading too frequently. And if we can trade just, 2 or 3 times, even better. So, one of the things that we do have, if you notice, we've been doing these midday, excuse me, with YouTube, and so frequently the 5-minute NQ or even the 3-minute, if you can look to take the first 2, 3 trade opportunities post 9:30, let the market open. Let everybody fly around, get in front of it, get on the wrong side, do whatever they're going to do. And even if, a person took this 9:39, 9:40 trade and it was wrong, at least the machine, would have you out with a relatively small trade, and then you wait for the next one. And maybe it would have been, 9:50 or 10:20 or whenever, but the likelihood is virtually every day you're going to get, because we've come on here at noon every day and we just go back and look, and there's a big fat, 3 5-minute tuna, and your job's to get it in the boat. Now, if a person did take this 9:40, just 10 minutes after the market opened at this level here, which would have been down in here, and yeah, if with a mini contract, they're up 2,300, and they might just say, trading robot, great, but you know what? I don't need the trading robot every single day. I'm a good little trader, and I understand what I'm looking for, and I will occasionally put on my own trades, and then maybe occasionally I will put on the trading robot. One mini contract is 2,200 right now. A micro is 220. 10 minis is 22,000. Now, a new person, even if they have the capital, isn't going to have the stamina, the thick skin, the experience to be able to manage 10 contracts. They would be reacting to the money in a big way, presumably, unless they had millions of dollars and 20 grand was no big deal, which is the case sometimes. You can see this is continuing to break down, but this would be the this would be certainly a stop level, but this would be a hard stop. You wouldn't want to see a break above that. And entirely possible, and we will do this during the Q school, so we'll suggest to people that, to do this is to draw, little red zones, don't want to be up in there. And then also draw out little target zones. Let's make it a little different here. So maybe, this here could be a beautiful, see if we can, get a little target zone in here. So I'd rather be a seller up here and rather be a buyer down here. So if I'm short, then, here I'd be a buyer to buy to close. But what was the trigger? Be like, well, that's all well and good, Don. You're seeing it now, but we called it out real time when this NQ was up in here at 90. Yes, it could have gone maybe a little bit higher into euphoria, but not likely. And then when she started to break, there's the break. So, and then if a person said, hey, that's going to be my one trade today, that's what I'm going to do. I'm going to take that and I'm going to make my 3, 4, $500, and they're done. They're done. Take your 3, 4, $500 and then go sit by the pool. Take the dog for a walk. Go do something else. If you have any questions, let us know. But we have just so many tools. These are beautiful. We call these the ball markers. They actually mark the swing points. We can put them on in a top and doubles, and then this paint bar is perfectly matching the swing machine. So this is where we would have wanted to be selling, up in here, and we're coming on down. Now, again, we have a robot running, so not going to intervene. But if this is the sort of thing that that you're most comfortable with, and I get that, we will do this with you, for 3+ weeks, but we're really going to really lean hard on you to become more robotic, because in the beginning, maybe 2-3 weeks, 2-3 months, maybe even 2-3 years, it's all fine doing this, but it will get old. It really will. And we will come in periodically. So, and then what we will do, if I'm trading this manually, we would then begin to move, if this was our hard stop up here, then, there would be, and we can do this, right? TradeStation has what they call a chart trading tool, and we can actually grab the stop and pull it down. And at this point, there's no rhyme or reason to, to take it. If this was the death stop up here and that was a sell zone, you certainly wouldn't. Let me get rid of that. I want a straight line. You certainly wouldn't want to take it above that. And the thing of it is that stop, we might come back. You can make a note of it. It's 15,207. We're not going to be here with you, come 3-4 o'clock, but we could be down a couple of hundred points from here. It's impossible. I don't know where it's going. I mean, I think we could, if we break, what I do like to do, this is a buy zone, not to buy it to go long, but to buy it to close. If I'm short, meaning I sold it up here, and as she runs down, I would maybe buy it down in here. And Susan would certainly do that. Susan would probably, she'd probably take her money like right now. And we can tell, this trade is up here on the short, in 4 minutes, there's $500. We were shorting it up in here, so it'd be even more than that. What I would do is, if we got down in here, what I would want to do is see just how fast and how fast we get here, what swing machine is doing up here when we get here. And if we get in here, maybe I could paint that green. Maybe I could get down into this area here. And then what I would do is I would move this stop here. And you can physically do this. We don't have it up. We don't have the chart trading tool up here. Again, TradeStation has a chart trading tool that you can literally just click on your stop and just drag it on down. and adjust it. You just don't, I don't want to do that. I wouldn't want to be doing that too soon. But if we got down in here and it was moving rapidly and swing machine was cratering, then what I'd probably do is I'd go ahead and take my stop and I'd put it like right above here, because former support, if this support gets broken, former support becomes resistance, and then see if we can get one to crap out. Now, if you're doing this, 3, 4, max for me, 5 times a day, max. You just don't need to do it that much. And if you're doing it and you get started on a Sunday night, maybe not even, I love Sunday nights, but Monday, Tuesday, Wednesday, Thursday, if you're not done by Friday, there's something wrong. I mean, you really need to be, we don't usually trade at all on Fridays. And you are going to catch, not every single trade is going to work out. Some may only be $200-300. This trade here, if we took exactly where the 1 minute went and said, hey, you know what? Yeah, there is a red zone here. You're up 700. But during the course of the week, depending upon where your account is, let's say you feel as though, hey, you know what? I've got some wood in the trade. It's Tuesday. I'm up $2,500 for the week. And, I'm going to set a break even stop and put a stop up here. And I'm just going to let it play out, and just get up from the chair, get on the treadmill, listen to some music, read a book, just relax. And maybe it goes back and it stops you out and, you still have a profitable week and you're gone. But if you do this like a machine, day after day after day, week after week after week, you will just the probability you will be in one of these trades where all hell breaks loose and down we go. And suddenly, you've got one trade that's, paying you $3,000, $4,000, $5,000. Those trades will cover up a lot of little sins, a lot of little mistakes. But again, this is visual, right? I mean, we could do this, day in and day out, and we will do this with a person in the Q school. We'll ask them, and we set it up so that we want to watch what they do, and then work with them. Now there are other things that we can do. For instance, when we did this little, actually, this should have been red zone up here. Let's just remove that. So what tripped us off here? So when we were pushing up in here just a few minutes ago, and you can roll the video back if folks are coming in and just seeing this, we were let me get a little marker here. We were up in here, right? We were pushing into euphoria. And I said, this is not where you want to be initiating a buy. If anything, you want to be looking for a rejection of a high and to play the other way. Well, now we're down over here, right? And that really should have been red. Let me undo that. This would have been, so this would have been saying, hey, you're into the sell zone. And then over here, you are getting into a buy zone. So, you've got a decision to make. If you did fade it up here and, you're up 670, $700, you get a decision. Do I take the money or don't I? And that can depend. And that depends on your trading personality. At minimum, you should not let this trade, if you did fade it up here, become a losing trade, right? You would risk, no more than, $600 here at this point. You make 15 to 20, but you cannot, that would be a cardinal sin. You cannot be up $600, $700 and let it turn into a losing trade. If you are doing it mechanically, if you are doing it on your own, that's a cardinal sin. Now, and Susan knows this all the time. Susan, if she had put this trade on, she's taking her $700. She's like, I made $700 down in 10 minutes. I'm taking it. Okay. And it's great because her risk tolerance is much different than mine. And so she will just do that. Like that's just what she'll do. And she'll say, hey, look, I'm down in here and I just don't want to see it go back. I'm more inclined to force the market to pitch to me. So again, I don't have we still have, by the way, we have a few folks in YouTube. We have a trading machine that is trading, and I'm just describing some things that are on the screen, and I'm not trading around the machine. I'm not disengaging the robot. I'm letting the robot do its thing, for better or for worse here. And it drew itself down overnight, and it's digging its way out. But as we come down here, we could, if we had the chart trading tool, I'd now want to remove, this would have been the sell zone up here. And we could still leave this as a buy stop here. So you would not let that profit, erode. This is not where you want to initiate visually, mechanically a short trade though, because you're down in here, you're down what we call the hole, you're down on support level, and it just wouldn't be the place. And I wouldn't necessarily buy it either. You could buy it to close the trade. And it just depends, if it's early in the week and it's your first, 1 or 2 trades, and you say, hey, you know what, I'm going to grab that $1,000, and you grab it, great. Then you grab it and you be done, and you wait, for something else to come up. But if you're already up a grand or two for the week, and you say, hey, you know what, I got a break. Not a break even. I stand to make, 400 or 500 if I come back up here, and I'll run that risk. But if we do break this support, yes, we could run down into this, this support level here. And I'm the one who drew that. I drew these little markers here. And I should probably make that, let me just do this here. Make that a little bit tighter. Do it this way. This could be a target right in here. But again, trading mechanically is fun and and exciting and all of that. But if you've been doing it for for days and days and years, it does get a little bit old, right? So I'd rather have the machine do it, and I feel quite confident, capable that if the machine gets itself into trouble, I can disengage the trading robot, execute a couple of trades, and get myself squared away. It's the idea. So let's erase though. So the market has truly changed, but we are getting down into the green zone, at least on the 135. It doesn't mean that we can't go lower. We could, but we're getting into an area where and Susan would be, if this was her trade, she'd be like, it's time to take the money. We faded up here, we took it down, made $600, $700, $800, $1,000. I'm just going to take the money. And that would be, a very fine trade. We'll see how that plays out. In the meantime, it's 12:40. Just to let everybody know what's going on, we have a trading robot that we turned on. We've turned it on at 11 p.m. on Sunday night, and we ran it until about noon on Monday. That paid about $1,200. We would have paid even more during the course of the day. Yesterday we did it, and it paid us about $500. So we're positive for the week. Unfortunately, last night we had a bunch of little choppy, crappy trades, and it drew down. It was down more than this. It was down about 2,500 or so thereabouts. And then at 940, it did take this trade here, and the machine pocketed $1,000 and knocked our dry down to what it is here. Now this strategy is more than capable of if this thing goes, it's trading swing machine in essence on a 5-minute interval. It will take it. So we're gonna continue, but I just thought while we're here, if you're accustomed, and it's not something we do this during the Q school, but we're not day in and day out though drawing trend lines and support and resistance, and would rather have the machinery doing that. So hope that makes sense. Anybody's got any questions, you let us know, and we'll be here. YouTube, we're going to be coming to a close at about 5 minutes of 1. So, if you're on YouTube, you might want to put it in high def, get a better image. And if you got any questions, here's your chance. And you just want to remember, you have, basically, trading futures, trading in the market, but trading futures, you have, 20 trading days, and you can see this thing struggling here, right? She's on support, it's not by accident, these swing points, this is where, and if we break this, we'll realistically, we'll come right down into here, this area right here, 15,063. We screwed around with this, much of the morning. And then we get back underneath here, this whole thing could crap out here this afternoon. I wouldn't be the least bit surprised. Let's put the NASDAQ on a, oops. Excuse me, I had to sneeze. Hit the sneeze button. Let me see if I can, oops, what happened there? All right, so let's put my computer's kind of, all right, and we're breaking support right now. Now if you're a short seller and you're always trying to short on breaking support, that you got to be careful with that, because they can be traps. I mean, it's good if you're already in the trade. I much prefer to be fading off of resistance and buying off of support. And then you can see this thing is really just, crapping right out. It's going to go after this swing point, and it's going to go after our little diamond down here. And we can use this. We were in it, we called out an audible, and, it would have been easily up. My computer is a little bit slow here. It's still working here. Do you see this? It's kind of locked up. I got a lot of things going on where we got YouTube going on. We're also we tape this for our members. So I can tell this is locked up here a little bit. Let me close some workspaces. We got quite a few desktops open. So let me try to free this thing up. We have a program called Camtasia, and that thing chews up a lot of the processor. So it's still working here fine, but you can see this is locked up. So we're just using a little too much of the computer. And see if I can get some applications shut down here. Try, sorry about that. But she has tightened up here. Shoot. Let's see if we can close some apps. You can see the radar, see my little mouse has What strategy or concept is the algo based on? Yeah, we have, John, thanks, over 70 at this point, over 70 algos. So I can tell you what it isn't based on. Swing machine, and again, and I'm sorry. So if you're looking here, not only you're on delay, you can see my little mouse here. I've overloaded the computer. We have our members watching on Zoom. We're using Camtasia, and we're also broadcasting to YouTube. And I have, quite a few desktops open, so I've got to try to get a desktop closed if I can too, and so save the processor here. But we have about over 70 proprietary trading robots. Okay, I don't know if you can hear that. I'm trying to close a desktop or two, and that should free up the computer. Yeah, there it is. So now we're here to be back in gear. Proprietary indicators, paint bars, show me studies, and strategies. It does not use Swing Machine. This tool up here is Swing Machine. Computer's still aggravated. Does not use moving averages, does not use MACDs, doesn't use any of that. Are there any based on Fibonacci or smart money concepts? We do have programs that are based on Fibonacci. I'm not sure what you mean by smart money. We have a proprietary set of stops that we call smart exits, but that's proprietary to us, so I don't think you're referring to that. I mean, you wouldn't have any knowledge of that, but now Fibonacci's, they have their place, but there's no, there's nothing magical about Fibonacci's. Now, if this, let's see if we can get this. Here we go. So we're about to get a 5-minute trade. You'll see the machine put the trade in. We know it's coming. If this 5-minute interval here confirms short, you'll see this block turn completely red. You'll see a number 2 in here confirming it'll be shrouded in white. And you'll also see the trade on the short side go in, and that'll go in automatically. Now, again, visually, we were calling it out up in here, right? That we put these on here because we were just a little bit bored and telling everybody, that the market was extended. It's also extended on, and there's the trade. So here is the 5-minute interval. It just confirms short right here, and that trade just went in. Now, I don't know what the outcome is, going to be here. We're not, trying to demonstrate an outcome. What we're doing here during the summer months is a little bit boring, is to give folks come in the middle part of the day and give folks like John a chance to see what we're doing, and to ask some questions and to create a little bit of awareness. Do we offer any trials? We don't, but I can tell you what we do offer and how we're set up. We have a monthly membership, and it's $100 a month, and it's month to month, right? So we don't ask anybody, join for 6 months or a year. It's month to month. And that monthly membership will get you a video view of all of our algos every night from Sunday through Thursday. And it isn't me drawing trend lines and just doing what we did here. It's not me doing that at all. It's the machine presenting chock full of trade opportunities. The monthly members, we have an unlimited, and we also give you some educational videos. The monthly members are looking to stay on the right side of the market, and they're looking for opportunities that are consistent and objective. And these could be stock trade opportunities, option trades, because we have tools that will give you option selections as well. And that's, it's $100 a month. And very rarely, we have an unlimited number of monthly memberships, and very rarely do we lose anybody. But and the videos try to follow a pretty much the same format each time. Now, those videos at night, they can be anywhere from 15 minutes to no more than an hour. Sundays is usually an hour. I'd say on average, they're about 30 minutes. And we try to follow a similar format with the algo. So there's certain ones that are more popular than others, and people, can gravitate to them. If you are desiring to be a full-time trader, either now or down the road, and you want to become what we call a robotic trader, mechanical trader, then the level of membership there is what we call an annual membership. And our annual members get everything that we have. They get all 70 programs, and they're on an annual lease. They get them all. And that annual membership for the first year is $4,000. Now, they also are monthly members, and what they get all the programs. They also get a live Zoom link. So we have members that are here now. They're not watching on YouTube. And we're not running a trading room per se, but anytime we're trading, our computers are, and by the way, I like what I'm seeing here. Now, I have a decision to make. I do happen to know this trading robot has a $1,000 profit target that was optimized on it. I've got a decision to make. I can override that. I don't think I will. I think I'll just let it play itself out. But it does look pretty good here, this little sell down, because it's not unusual at all for this thing to be up 2,000-3,000. But we'll let it, and maybe today we'll be down 400 or 500. I mean, it's possible. But they can patch in and they can reach us and ask us questions, or so it's not like we are not available. But and then and I will say this, as a second year, if a person stays and is with us for subsequent years, the cost drops from 4,000 to 3,500, and we also give the person an additional month free for every year they're with us, up to 6 months. So we're trying to increase value and decrease cost. And during the course of the year, we will add more programs, and we don't charge anybody. Also, too, during the course of the year, John, if you had an idea or a concept or something that you could write out, we will do our level best. If you want us to try to program that, back test it, forward test it, and we will do that at no additional cost too. We just don't have a deadline. And it's, if it's within our skill set, and we haven't had anything yet, in 15 something years. Now, if you go to the website, though, we don't let anyone sign up as an annual without first going through what we call a Q school. And that is a one-time purchase. We want to spend um, we want to spend 3 weeks plus, it's 3 weeks with the person. We give them a live Zoom feed. We present the different tools that we're using day by day. And we ask them to compete with the machine. We ask them to be trading in simulations so they can be focused on learning. We ask them to be keeping their score right from the beginning. And you don't have to have TradeStation to go through the Q school, but if you do, it's a bonus. And we have about 25 hours of on-demand education during that Q school. The question you're asking, John, is what are the stats? Do you offer stats on your various algos? We do go through, when we're going through the Q school, we go into the back test, we go into the forward tests. The question that you have, that I would have, that everyone has, is, are any of these programs, and this kind of gets to your question about the trial, are any of these programs or any of these tools going to help me get to where I want to go? And we think so. I certainly hope so, but I can't say because I don't know what an individual person is going to do. But at the end of the Q school, you will know, because we will be asking you to be doing the trading, and you will know. You'll answer that question. So at the end of the Q school, if a person decides to take the 3 weeks of education and move on with it, we hope that they'll stay, but they might take that information and transfer it and go off and do very well. They may stay as a monthly member. If they do well, which we hope that they will, there's some risk in there for us, but we're confident that you will. Person puts in the time and the effort. At the end of that Q school, if the person says, hey, Don, I do want to become an annual member, what we will do, the cost of the Q school is $3,000. We'll credit you back $1,000, either on the Q school or on the purchase of the annual subscription. So that's kind of how we set it up, and why, and more valuable than any individual program is really the education. You need to be able to, there's no jumping the shark. I guess what I meant was, what are the algos offering a 75% win rate? John, is a 75% win rate important? Is that how you keep score? I'm being a little facetious with you. So, see, this is the thing that and why, and this also illustrates why we don't sell individual programs, Sean. If I sell an individual program to a person who is not a serious trader, well, I want to know how the offer offers an edge, right? I understand that. The reason why we don't sell individual programs is, and what's more valuable than the individual programs is the education. Most people, when they ask about a program, they're not even sure how to keep score, right? So this program that we're running this week, as an example, John, It had a win-loss ratio yesterday. Well, I'll tell you what it did. On From Sunday night to Monday, it made $1,200. Its win-loss ratio was 34%. 34%. Yesterday, we ran it from 11 at night until, in the morning. This was yesterday, and it made about $515. And its win-loss ratio was, once again, it had 8 trades and it lost 5 out of the 8. But yet it still made money. So, and that's why a lot of people have a hard time ever getting to becoming a robotic trader, is because when they're doing their trading, they're measuring their performance based on money, which is greed and fear. They are basing their performance on a win-loss ratio, which is irrelevant to us. It really is. Because they want to feel good. If you trade 10 times, you want to win 7 or 8 out of 10 times. When we already know from a robotic standpoint that a lot of the robots, they can make money if they lose 7 or 8 out of 10 times. The way that we keep score is based on profit factor. So I'm going to have to take a short break, but I'm happy to answer any other questions. I'm going to leave it up. We got a few folks that are seeing this for the first time. But the first step of learning is what we're trying to do is, and I'll kind of map this out a little bit. You're very welcome. Is most people start out in a box called discretionary trading. They're trading what they see, what they think, what they hear, or ultimately they start trading what other people see, think, or hear. And it's a very hard way to go. Most people live and die in that box. It is important to have good discretionary skills, which we will help a person develop. It is important to have them. It's just very, very difficult to do it day in and day out. Very difficult. We try to move the person into this box, which is mechanical. I won't take the time to put the initials in here, but we're trying to move them into a mechanical state. And what is the difference? They're trading what the machine is presenting. That calls for education, because over here, you're concerned with win-loss ratios, you're concerned with a whole lot of Fibonacci's and moving averages and MACDs. You're concerned with a lot of stuff that is just in the way. And we're going to try to move you into a mechanical realm and show you, actually, you will show yourself that this is a better state to be in. Then, oops, I don't want the arrow. Then we will attempt to move you into this box, which is robotic. And most of our members are going back and forth and back between mechanical and robotic, robotic and mechanical. What I mean by robotic is just what we're doing here. I am not disengaging the robot. I'm just letting it run. I could disengage and trade it mechanically, but I'm not. And then the last box, oops, not that arrow. The last box that we tried to get to, and it takes 3 weeks just to get there, but then you'll spend the rest of your life. And this is the big box, is where you become a robotic hedger. and you're trading multiple markets on multiple timeframes. The robot that's trading is actually trading three different is trading multiple timeframes, and we can trade multiple timeframes with multiple markets. So and let's just and we will go back and forth between the two. But most people, but there's no jumping the shark. So a lot of times people will see what we're doing and they'll send us an email and they'll say, hey, Bagger, how much is that bot? They just, they think that they can buy a robot and they don't have to learn anything to get to here. There's no jumping the shark. There's no buying a single robot so that you don't have to learn to be a discretionary trader or mechanical trader. You do need to have those skills set. It's like being a pilot. You need to have time behind the the controls, because these robots have criteria that need to be back tested, need to be forward tested, need to be set, and I can't do that for you. But we will spend 3+ weeks with you trying to educate the person as to what that is and how to go about it. I hope that makes sense. I've got to take a short break, but I'm going to let it run. I'm going to erase because the machine didn't put these markers on, so I'm going to take them off. Everything else is being put on by the machine, and I'll erase this. But I hope that answered your question a little bit. If there's anything else, but we'll let you watch. And in the trade that's up there, that is being managed by the machine. Okay, we're back. I'm not sure if John is still there. John, I referred to profit factor. I don't know if you know what that is. Um, and if you have any interest, you can let me know if you know what it is. But it's a big part of what we do, and even these little YouTube videos is really just to show and give you a glimpse of how we approach it. But we're doing something that nobody else is really doing, and most retail traders, and even for that matter, maybe even some of the pros, so-called, um, are not explaining how they keep score. And it's really important. We're trying to teach people how to trade as a business for themselves. I'm not talking about managing other people's money. I'm not talking about trading for other people, but I'm talking about how to approach coming into the market and extracting cash flow and how you measure it. And and if you don't know how to keep score, you're at a distinct disadvantage because you don't know what to work on. It isn't enough just to say, I shot, an 87 or a 92 in golf. You need a little bit more information than that. One of the questions that the gentleman, John, and maybe he's left, I don't see him, ask this. He wants to know whether or not, I want to know if the algo offers an edge. And and see, these questions are understandable, but what folks don't understand is the edge, the holy grail, is John. It's his ability to understand the market that he's trading, his ability to understand the the chart that he might be using to track the money flow. Is he using a time-based chart? Is he using a point and figure? Is he using a line break? Is he using Renko, classic Renko, custom Renko? Um, is he trading during off hours? Is he trading during normal session hours? Does he understand how to backtest? Does he understand how to interpret the backtest? Does he understand how to forward test? Does he understand how to run a strategy and discern for himself whether or not there is an edge, so to speak, with a particular trading robot? What he might be able to do with his own trading skill. Does he have any trading skill to help the robot? There'll be times when the robot can, help you or help the trader. We're just talking, in general terms. If somebody is looking for a trading robot so that they don't have to learn anything and just plug it in and it's just going to vacuum them up money, then they're looking for something that doesn't exist and they're going to be disappointed. And we're not going to have to be concerned with them because, they're not going to enroll in a 3-week Q school. They're just not, because they don't want to learn. They just looking for something to plug in, and we don't want that. If the 3-week Q school, if you stop and you think about it, we've been told by many a business person is like, you would have a lot more members if you didn't do that. You would sell a lot more programs if you didn't do that. We don't want to do that. We want to make sure that folks understand, that this is a lifelong endeavor and how to go about it, and it does slow the process down. So we're not trying to appeal to, the masses. This is for, a few select folks each and every year. And we do have, when it comes to annual memberships, we have a limited number of licenses that we'll issue each year. And then once they're full, we wait, because it takes time, and we will work very hard with you to answer those questions that'll come up, not just, this is support, this is resistance, and, that sort of thing. There's a lot. And the first step of learning anything is becoming aware of what it is you don't know, and then setting out to find someone or some source to help you learn what it is you don't know, to begin to hone that. The From our point of view, and I think it's even fairly evident, the price action in the market, I don't care whether it be in options or stock or gold or the NASDAQ, is being driven by machines. It isn't being driven by individual traders, calling up from their bag phone, their broker at Merrill Lynch or someplace, and buying, 100 shares or something. It just isn't. That was the 1990s. So if you're trying to, trade like it's 1995, good luck with that. But it's changed. It probably always has. It's just that you didn't have the availability of these tools back then that we have now. During the Q school, we have a private Zoom link, and we put up the image of what it is we're working on for you, for the person, and there is a curriculum, and it's very specific, and we force the person, to, we it's just that a curriculum, and we force them to watch step by step. Otherwise person would just be all over the map. And it takes about three plus weeks. What we want to be able to do is lay this out like a buffet table. And so that following the Q school, as you go to get underway, you know what's available. And you're not, trying to, you're not jumping, all over the place, but at least, you'll have the knowledge and the experience of the Q school to be able to say, okay, this is what's available to me, and this is what, the approach that I want to take. We do point to now what I do, what someone else does doesn't really matter to any individual. It's only what you do. But the CME has run some contests that are open to the public, and you have to trade on their platform. We can't trade it robotically. We can trade it mechanically. And there have been the last 3 contests. They're week long by their rules. Everyone has the same level of margin, same access to markets. It can't be rigged. Now, the only way you make money in the contest is to be in the top 3. But in the 3 contests ago, there were 1,400 people. And going into the last day on Friday, we were number 10, and we finished 20. The second one, on the last day at 5 a.m, we were ranked number 2. We finished number 7 out of 1,600. And the most recent one was our worst performance. There were 2,200 people. On the 24 hours out, we were ranked 35, and we finished 107. We're in the top 5%. And that was our worst finish. We used swing machine, and we used custom Rinko in a specific strategy that we traded mechanically. It's a little bit cumbersome for us because we have to go to the CME site and execute the trades. So again, we're not disengaging the robot. We're letting the robot, and he's having a rough day, but we're going to let him play it out. Now, what we did earlier was when we were up in here, if you recall, let me just mark this up here a little bit. I'll choose white. When we were up in here, we said that the likelihood is, and we were up over here, that we were likely to reject, and we did. And we just said, now, we don't know how far down things are going to go. We just said that if one was to fade it, it would have wanted to have the stop right up above. And that's where we put that little red zone. When we came back and we got into this zone here, we said that, this is not where you would short, but this is where you might want to think about either closing that position or potentially doing what? Getting long. And if you person had let this establish itself, if you got long in here or even here, ideally you just got to define where your stop is going to be. And on this particular chart, ideally I want to have my stop, underneath that little swing point. But it still feels pretty heavy to us. And I'm not suggesting anybody take any of these trades, but we will do the best we can during the 3+ weeks, whether it be this is a time chart, by the way. And there are other tools. There are many other tools that we could be using. We will use some standard tools, some like Bollinger Bands and so forth, and teach folks how to use that. And then we, have a host of other tools as well. I'll clear that writing off here, though. Let me clear this off. But oops, I didn't mean to do that. We're not hiding anything. We're just we use the zoom feature to kind of clean up the image here. So I'll put that. I got a little black band that we put up here, right in here. So we just kind of clear that up a little bit. I think it makes it a little easier on the eyes. If you have any questions, don't hesitate. And most people are keeping the way they keep score is the money. And there are folks that have been trading a long time, but if you're keeping score purely on the money day in and day out, you're trading greed and fear, and you may not agree or you may not recognize it, and it will run its course, and they will get you. If you're trading on a percentage basis, I made 30%, I made 50%, I made 100% on that option. That's not relevant either. As a trader, if you have, millions and hundreds of millions and billions of dollars in your Warren Buffett, and you want to say, I got a 10% return from one year to the next, that's fine. But if you're trying to do it as on individual trades, or on as an individual, I got 10% last year. It doesn't really tell us anything. It doesn't really, because 10% on what? $10,000. You made $1,000. Woohoo. On $100,000, I got a 10% return. Woohoo. It doesn't matter. It doesn't tell us anything. If you are driven by the winning percentage, and there are folks out there. There's the guy Hedge Eye. He charges for this, charges for that. He's got a service for this, a service for that, and they talk about oh, we got a 90% win rate. That's ridiculous. It doesn't tell you anything. It doesn't even. You can have a 90% win rate and not make any money, and you may actually be losing money because you could have 9 trades in a row where you make $1,000. Woohoo, 9 in a row. And then on the 10th one, you lose, 20,000 or 30,000. So the win rate doesn't tell you anything. It doesn't. But they promote that. They sell that, right? So that's why we don't make any any claims about win rates or percentage returns or anything. I'm not making specific recommendations to buy or sell anything. I'm not making any claims that you should be doing this or shouldn't be doing it. We're providing tools that we use. We spend 3 weeks with you explaining how we go about it. And then you get a chance to, to what John was asking about a trial, to say, you know what, I learned a lot. You will learn a lot over the 3 weeks. And you say, nah, I don't want to do this. I don't want to go any further. I think we've had maybe 2 people that haven't. In both instances, both came back and said, they made a mistake and they wanted to. And we said, no, we'll respect, what you decided earlier and not to. One person just sold himself short. He did really well, but he hated computers. So it's probably better off. So the other person, I'm not really sure what they were doing. I'm not really sure. But But if you have any questions, let us know. We're well beyond. It is now 1:30, so we didn't expect to go much beyond 1. So we'll hang out here for a little bit if there are any other questions, and then we're going to need the resources on the computer. And we're going to tape this, and then what we'll do is we're already a little bit beyond. We would have liked to have been done about middle of the day. We still got plenty of time to clean this up, but then we'll compress the video down to just a couple of minutes, for better or for worse, and document what we do. If you want to follow us on Twitter, it's free. You want to follow us on YouTube, it's also free. If you want to send us any questions, or you want video images of what we're doing, you let us know. We do a whole lot of different things. We don't necessarily change it from day to day. But again, we can trade multiple time frames. We can trade multiple markets. We can trade using the radar that is monitoring time or tick transaction level detail, and match that with price charts. So it's pretty varied. But a person needs to. We're with you intensely during the 3 weeks. But after that, the person, I don't intrude on lives, but, they need to play their game. They need to, we're here as a resource and to help around the edges, but they'll have to take it on. And when we describe those boxes of discretionary trading, mechanical trading, robotic hedging, there's no jumping the shark. Even once you get through the Q school, you can't be totally dependent on the machine. You've got to work on your own trading skill. You're going to have to work. It's just like I can't think of a better example than a pilot. Just because you can buy the plane, and just because the plane has an autopilot doesn't mean that it's going to fly you around. And I think Tesla is learning that even with their car. It might be able to park the car, it might be able to auto drive it a little bit, but you're still gonna, need to probably not be asleep, in the back seat. You need to have those skills. This, we look at, Fibonacci, and we got things to Fibonacci, you can tell I don't have to draw this out, but we reject this high of 15,219. We come down and we're back into this zone here. So we can see, green zone here, red zone here, and we're more or less right in the middle. We're probably retraced from here to here. We're probably retraced about, about 0.3, about 30% of that move. Most of the time it's about 50%. The likelihood is that we're going to reject this, but I don't know, I don't know, but we're likely to break this and come back down and revisit. This is the area that it's having trouble getting through, this area right in here. And so it's struggling, it's rejecting, but it couldn't get up through 15.2. So it's trying to make a decision. And the machines are just chasing each other back and forth. They're looking for buyers. They're looking for sellers. And the retail crowd are just flinging stuff up against the wall and but if this, we're gonna stay with it. And our machine, this particular program, it's not going to win on every single trade. We know that. We do know what the trading characteristics are, over the last couple of weeks, and then we can monitor and measure what we're doing against those trading characteristics. And over the last few days, it's doing fine. So we're gonna stay with it. Now, a person who doesn't have any of that trading skill, doesn't have any of that knowledge, that's what takes us, at least 3 weeks. Now, we've had folks say, Don, it really should be 4 weeks or 5 weeks. So, we have to, we can't do that, but, but we think 3 weeks is good. But same thing, if a person gets into a plane and gets themselves into a situation where, um, they're over their head. They can't see the horizon. They can't see the ground. They can't tell up from down, and they're not instrument trained, and they start listening to their inner ear. They're probably going to put the thing into the side of the mountain. If a person is running this trading robot and they don't have any trading skill, they don't have any experience with a trading robot, the first moment it gets down, they're going to start, intervening or getting scared, or, they'll just keep taking losses, you know. So, that's what we have to take time and to work through, and also to show a person we're not doing it here now. We're not running a Q school here, but taking you behind the scenes and explaining what a strategy is attempting to do, and what the trading characteristics are, and how to keep track on it. And that's what our traders will be doing, for the rest of their lives. There isn't and again, we come back to that question, is there an edge? There is an edge, but it's you. It's you. You're the edge. And sometimes, we get people that, they maybe have unreal expectations. One of the questions I like to ask is, how much money does a person want to make in a month's time? I had a gentleman, he was nice enough, he called me on the phone. He was from the Balkans of all places. And when I asked him, he on a monthly basis, how much, if he did everything that he wanted to do and everything, realize his dreams, you know, um, how much on a monthly basis did he want to make or need to make? And he said to me, two to three X. I don't understand. Two to three. I don't even understand. On 2 to 3X. What do you, 2 to 3,000? I didn't even. No, I want to double. I want to double or triple my money every month. Oh, okay. I mean, we didn't even get into, and this is a person that didn't even really, understand the proper use of margin. I'm like, okay, yeah, well, I wish you luck with that. I'm not going to spend 3 weeks of my life with a person that, is, wasting his time, and he's wasting his time. The martingale system, pretty popular in Europe. So for better or for worse, we'll go till 2 o'clock unless there are other questions on YouTube, and then we'll need to turn down. We're over an hour, and but we need the resources on the computer. Now we can use these tools, by the way, to trade options. We're varied in our approach and what we use. But again, if a person, and we go through on the Q school, is trading options, it's really important that a person understand how options are priced. There's something, futures don't use this. We don't have to concern ourselves with the Greeks, but with options, you need to be aware of not just direction, but you got to be aware of duration. You've got to be aware of implied volatility and time. They have a time limit to them. And so that's also risk parameters here. But if you have any questions on what it is you're seeing or what it is we're doing, I'm happy to answer questions. And now I can tell you the machine is telling us on this particular program that's running, I can go in and let me do this. And what I'm measuring our performance against is over the last 2 weeks, this particular program is telling us that we would expect a profit factor of about 1.4, 1.43, fairly narrow. If I was trading mechanically by, myself, I would want something higher than that. A total net profit of about $9,680 over the last 2 weeks. It's had 131 trades. Now, this is what's important. The winning percentage of this particular program is 32%. Now, think about that. That means that it's going to lose 7 out of 10 times. See, that's where, a new person or a new trader or someone not aware of what they need to be aware of, be like, oh, I can't do that. I can't, I mean, if a person put on I'm not saying, but a new person put on 10 trades and they lose 7 out of 10 times, they're going to feel like they've been, in a wrestling match with or a boxing match with Muhammad Ali or something. They're going to feel pretty beaten up. That's why it's also important to understand there are only, 4 ways to trade. Do you know what those 4 ways are? There are only 4. And if you don't know what the 4 different ways to trade are, then you don't know what the expectation is. Because those 4 different ways have different expectations in winning percentage and outcome, time. They have very different. And if you don't know, then you're going to have anxiety. You're going to have stress because you really don't know what you're doing. you know? You know? There are certain strategies that, yes, you do need, in fact, to win 70 to 80% of the time. There are some. Now, those strategies, they can pay very little. But if a person has on a strategy that is going to, pay them well, but they're trying to win 70 to 80% of the time, what they do is and we hear this all the time, it's like, oh man, every time I kill the trade, it goes on to make more. Oh, every time, and it's with that emotion too. You can hear it in their voice, oh, so then the next time I'm going to be more patient. And then, then it turns around and they lose big, they lose big. And what is happening is, may not know it, but they're being motivated by the little window up there that you see in the upper left-hand corner. They're being motivated by that money. And when they get up a little bit of money, they take it because it feels good. When they get down, a little bit, they don't take it because they want to be right. Then they get down a little bit more. And then they definitely don't want to take it. Well, I don't want to lose that. I don't want to lose that. Well, and then they start thinking, well, it'll come back. It'll come back. Oh, oh no, I'm done. Oh no. Oh, I've wasted a whole day. Oh, I wasted a whole week. Oh, I can't. Oh, I can't believe I can't tell my wife I was. Oh, it's awful, and all that emotion. That's terrible. It's terrible. And if that's you, just stop. Just don't do it. Just stop. Don't do it. You got to really stop and think about what it is you're doing. And the futures are leveraged, and fortunately today they're incremental. So if $500 is a huge sum of money and is putting huge pressure on you, you can knock it down to a micro level. You can't go any smaller than that. So instead of being down 570, 580, would be down 50 or $60. It's all relative. The process is the same. We have members that, for them to trade one mini, to be up $500 or $600 is like, I can't even, Don, it's just not enough for me to even pay attention. And they're trading, handfuls of these things. So it's all relative. It is all relative. But if you're in there making your decisions based on the money, they're going to kill you. Wall Street and Madison Avenue, they're going to eat you alive. And they count on you doing it. They absolutely do. And they fill your head with all kinds of stories and all kinds of, and it's just nonsense. The price is moving up and down and up right now. Has it got anything to do with inflation, deflation, Apple this, Apple that, Amazon this, Amazon? No, not at all. Their machinery is incredibly sophisticated. They have machines that are, trading the futures markets against the options market, against the stock market, looking for, looking for just small pieces. They're purchasing the order flow from the brokerages and basically front running. The prices move up, the prices move down. Our job is to come in as traders, ideally, and we want to come in mechanically, we want to come in robotically, and we just want to carve a piece off. A piece. And we want to try to maintain, a very sober view of this and not get really high, not get really low, not get carpal tunnel, not get all stressed out. Could we trade more leverage? Yes. Have I traded? Yes. I made those mistakes, years ago. Traded such leverage that I actually got myopic vision, where my vision tunneled in, became so fearful. You can do that, so we don't do that. We don't. Just stay patient and trade within yourself, right? Programs or these trading robots, they'll come in and out of favor, right? So, when I give the winning or the trading, not the winning, but the trading characteristics of a program, I'll know what those trading characteristics are over a 2 to 3 week period. That doesn't ensure that that's what's going to happen in the future. May not. What's happened in the past may or may not happen in the future. The golf ball is not going to land in exactly the same place that it did the previous round. Not going to happen. You know, Yesterday, I hit a 7 iron from such and such, and today I may have to hit a 5 iron. Maybe the wind is different. Maybe it's different. The ball's in a different position. It's different. Yet everybody comes at this every single day. They want to know, you know, they want to do exactly the same thing that they did yesterday or on the trade before. It's not realistic. Instead of asking, and I'm not beating anybody up, but people ask me, what is the win rate of the algo? What is the algo? What is the edge on the algo? Should be asking, what am I going to learn? If I spend 3 weeks with you, what are you going to teach? I have a gentleman, he's in Kansas, and he had um, he's been trading futures his whole life. His daddy was trading futures. He's got acres and acres of corn and cattle. And he called me up back a couple years ago and said, I'm intrigued with what you're doing, but this is who I am and this is what I do. And I trade futures to hedge my business, but I'm interested in becoming more of a trader per se. But what his question was? What can you do? What can I learn from you? I've been doing this my whole life. My father was doing this his whole life. What can I learn? And so I'm like, well, that's a really good question. And so we talked at length, and I just said, well, I said, this is how we do it. And I said, but we're going to go through a curriculum, and I walked them through that, about the Q school. And I said, and you're gonna get a view. I said, I don't think you're gonna look at the markets the same way. It got to be about 3 or 4 days in, and I hadn't heard a whole lot, hadn't asked a lot of questions, and I said to him, to Gary, I said, "How you doing?" He goes, "Doing all right." And I said, "You got any questions for me?" He goes, well, one of the questions is, because he was watching, we set up the first couple of days. We don't have a chart. We just have swing machine. And he said, why would anybody use a chart? And I just kind of chuckled. He was trading purely from swing machine. No chart at all, which is what we, will ask a person in the Q school to do. You may not need a chart. It's like, having a chart though is kind of like looking out the window and being able to see the horizon, a little bit. It may be a little comforting, but sometimes it can, create vertigo and can be a hindrance. Right now on a 5 minute basis, this NQ, we're suffering a drawdown on the strategy. It's in this trade right here. It's right in the middle of the field at 15,105. You know, um, I can tell from here, where we are. I can certainly see down here, but there's no these these strategies will come in and out of favor with various markets, and you'll need to be the person to decide, the things that you can decide. What markets do I want to trade? What time do I want to trade? I probably would have had a much different result if we didn't start at 11 p.m. We had started early in the day, but maybe not, run it in the wee hours. Maybe, so maybe next week I do it a little bit different. How much leverage do you want to use? And do you want to do any kind of hedging at all? So there's a lot of different things. And what are your goals? There are 20 trading days in a month. I mean, if your goal is to come in and it's to be $100 a day, which is no small amount. I mean, it's $2,000 a month. You don't have to have these types of this type of account volatility. Certainly not. And if you want to come in and do it mechanically, we're going to try to help you do that mechanically. I probably wouldn't use this style of chart if I was going to do that. Probably wouldn't use, a lot of the, things that we're using right here, right now. You can make it even simpler. Maybe you only want to be in the market, or maybe you only want to be trading for about an hour. Very individual. Okay, folks, it is 2 o'clock. I'm going to give you a couple of minutes and then we will need to turn down. I just want to say thank you for stopping by on YouTube. You're more than welcome to visit the website. More than welcome to send us any questions. You're more than welcome to call. Take your phone call 9 a.m. to 9 p.m. Can be on a weekend, whatever. We've been doing this a long time. It hasn't been just 6 months or 6 years. We've been doing it a long time. Um, we're not making specific recommendations to buy or sell. We're not making any claims, and I'm not suggesting that everybody should do this. In fact, to the contrary, it's a it's a small private club, and I do shadow the Twitter sphere and the YouTube, and I just don't see anybody doing what we're doing. And if you think about how we structure our membership, I deliberately try to slow it down to what John was asking for as far as a trial. Basically, the Q School is a trial for you and for us. I mean, we're going to guarantee a spot for you, but if you go through the Q School and struggle, and we can't get you, I'm going to be the first person to say, maybe this isn't for you. I'm not gonna, we don't want to be wasting our time. We don't want to be wasting yours, but that hasn't, fortunately, um, we've never had to say that other than, two people, one, he just, person just hated the computer, and the other person, was, I believe, was just real abusive when it came to risk. He wanted to swing for the fences, and, I don't know. He's probably not even trading today. We thank you for coming by.